News Radio 700 WLW.
Everybody's all wound up about the economy pretty much all the time, and here we are at the beginning of the year, and it keeps kind of like the stock market. It kind of heaves, it goes, and it comes, and I mean, it just seems to go back and forth. It really hasn't done anything so far this year, and you always hear because none of us really know when they're talking about will the Fed cut interest rates. I don't know what it means. If it's good, okay. If it's good, I guess I'll find out.
Right. And then you're hearing like here and there, you're hearing like, you get this layoff news about something happens. You're like, whoa. And then you won't hear anything. And you'll be like, oh, yeah, so-and-so, like that company laid off a bunch of people. And it's a little weird times right now.
Well, let's talk to a guy who can help us out here. He is a highly regarded economic strategist. He is an author, including the #1 Amazon best-selling book, Rethinking Economic Growth. He is our friend, Dan Varroney. Dan, welcome to the program.
Thank you so much. Happy Friday to you both.
Oh, yeah. Well, we're looking forward to the weekend. I don't know about where you're at, Dan, but, man, it has been cold as here. So let's talk about that, Dan. What are we looking at here as far as – because the Fed the other day did not cut interest rates. Was that a good thing or a bad thing? What are we looking at here? Because Trump is all over him to keep cutting and keep cutting and keep cutting. But isn't that bad for the economy in the long run?
So, the Fed chair met with the Board of Governors, the Federal Open Market Committee, and they decided that the 75 basis points cuts that they made last fall were fine. In his report to the press, Chair Powell indicated that he thought that things were good in the labor market and inflation was heading in the right direction. And for me, I will tell you that I interviewed 35 small business owners and had completed surveys from about 200 small business owners over the last year. And the big issue for them is accessible and affordable capital. And why that matters is with a big, beautiful law in full effect, small businesses can deduct 100% of equipment purchases and 100% of new buildings. What that all means is that if they can have more affordable capital, they'll buy new equipment, they'll build new buildings, and they will hire people. Hiring, while we can argue is stable, is sluggish. Jobs on average came in last year at about 49,000 new jobs a year. That was low. Small business had its better or best month in December. But if jobs are going to come back in this economy, they're going to come from small business. 2 of 3 new jobs come from small business. Half the workforce comes from small business. 99.9% of the companies in this country are small businesses. There's 33 million small businesses. If we want to get jobs going, it's all about small business. Interest rates need to come down. This morning, the president announced Kevin Warsh as his nominee for the new chair of the Fed. If he is confirmed by the Senate, he will begin his work sometime in May. And I think one of his first actions will be to reduce interest rates. When he does, the following will happen. Small businesses will have more affordable capital. Mortgage rates will be more affordable, and people will be able to buy houses. What I mean by that, for the folks looking for their first-time house, they'll be able to get in. For the folks looking to move into bigger houses, they'll be able to move to bigger houses. And that's how the economy will really get moving again. Interest rates have slammed the brakes on mobility and moving the economy forward, mobility and getting small businesses to invest and hire, and mobility and buying houses. And that's where we are.
Okay. Yep. And when do you see that turning around, or projected that could turn around?
Talking May, June, right?
Oh, so okay. So it's that soon.
Yeah. I mean, honestly, so let me tell you, there's other good news that we should talk about. So that's the Federal Reserve and the interest rates. But I will tell you that as we speak today, people have seen 1 or 2 paychecks this month, And if they have adjusted their withholding rates, they are taking home more money as a result of the big, beautiful law. In addition, for those filing their income tax returns, they'll see between $1,000 and $2,000 coming back to them. So for consumers, the good news is more money in the paychecks, they're getting a refund. For people who are we're getting taxed on tips. They are not getting taxed on tips, I think, up to $25,000, I believe it is.
Wow.
And no tax on Social Security. There is over $200 billion worth of stimulus put into the economy by the President and Treasury Secretary Bessent. And I feel that people are going to be feeling better and better. When interest rates finally come down, and they will, people will be feeling even better. My sense is by the time we get to July 1, that the economy will be in far better shape. So now the other thing I want to share with you is that we keep hearing this term out in the media. You know, we have this sticky inflation.
Right.
Well, so I want to speak to that because it makes me, a little wound up. The issue is that the data we're seeing now is old data. We had a government shutdown. So the CPI number that came out, it was pretty good. The wholesale price numbers came out a little high today, but I will tell you, this is old data. When the next few months of numbers come out, the numbers will be down. So I monitor on X a platform called Trueflation. Let me give you their inflation numbers as of yesterday. The consumer price index as of yesterday were 1.23%. The PCE, which is the number the Fed follows, was 1.45%. You know what's good about both of those numbers? It's below the Fed target of 2%. So we're in good shape. Now, the final piece for your listeners is when people say, we're still seeing high prices. What's that about? The last administration, I realize this administration has been in office for a year. The prior administration implemented regulations at the federal level that cost about $1.4 trillion. If your small businesses represent 99.9% of those companies, there's no way they could bear those costs on their own. They were raising prices. President Trump has aggressively been reducing regulations. It's going to take another 6 months or so for the overall economy to see the full impact of those reduced regulations and lower costs. I promise you that, the old saying, Rome wasn't built in a day. Rome wasn't built in a day. I believed from the minute President Trump took office that it would take up to 18 months for the cost of these regulations to go away, for any new legislation to take full effect, and for interest rates to come down. So that's the trajectory I believe, I'm confident we're headed in. And your listeners need to be confident in this, that the economy is in the right direction. So we had economic growth in the fourth quarter. The Atlanta Federal Reserve is saying at about 4.4% of last year. I believe this year, overall, at the least, we're going to see economic growth at 4%, and it could be higher. So we're going in the right direction. We're absolutely going the right direction. The right policies are in place, but interest rates need to come down.
Dan Varroney is our guest, and Dan, what about the tariffs? Your thoughts on these tariffs? Because people are talking out of both sides of their mouth on this. It seems that we are indeed incurring these costs, or as opposed to the people we're supposed to be, quote unquote. I don't know if punishing is the right word, but who's eating this cost? It seems to be us.
So I think that's a fair question. So I am in the data universe. I do strategic planning and market research. And what I tell my clients is that we have to act on what we know versus what we think. If you listen to the media, they will say that the consumers are eating the tariffs. If you listen to some of the people on the financial channels, the consumers are eating the tariffs.
Mm-hmm.
Two things I have to say about that. First, April will be a full year since the tariffs were implemented. Let's see what that looks like. I have no data that says that consumers have had to eat the tariffs. That's my first point. Mm-hmm. My second point, in the first Trump administration, the data that I have says that tariffs had a very de minimis or minimal effect, less than 1%. I believe at the end of the day, the same thing will happen with this set of tariffs. Tariffs are not the issue. High regulatory costs are the issue. High interest rates are the issue. We need accommodative Fed policy. That's what Kevin Warsh, the new Federal Reserve chair, will bring to the Federal Reserve. That will reduce interest rate costs. That will make mortgages more affordable. It will spur small businesses to invest and to hire. As regulations continue to come down, so the thing we haven't talked about, has anybody noticed that gasoline prices are down on average 80 cents? They're down because President Trump and his administration have aggressively unwound the regulatory morass that was implemented by the last administration. So, and those costs have helped lower things like the cost of eggs. So as you can see, if we've got strong economic growth in the last 2 quarters of last year, we're seeing gasoline and the price of some of our food coming down. This is all good news for us. We've got the right tax and regulatory policy in place. We're going in the right direction. People are seeing more money in their paychecks. Yes, we're going in the right direction. Right. They're going to be getting tax refunds. So there you are.
All right. With I hope you're right, Dan, because man, that's a rosy picture. Dan. I'm liking it. Dan Varroney, people want to find out more about you. Where can they go?
So they can go to danielvarroney.com on the web. They can, by all means, read my book at amazon.com, Rethinking Economic Growth, and that's the way to find me.
We appreciate it, man. Thanks. Great stuff.
Thank you, Dan.
Have a great weekend.
You too.